Welcome back. You're watching us here on Chartbusters. Let's shift focus to the primary market. Niva Bupa Health Insurance IPO opens for subscription today. Price band at around 70 to 74 odd rupees. We have Krishnan Ramachandran, who's the MD and CEO of the company, along with Vishwanath Mahendra, who's the CFO of the company. Thanks a lot, gentlemen, for joining in, and good luck for your stint on D Street itself. And we hope it's a very successful one for you and your shareholders. Krishnan, let's start about talking about growth, right? Over the last few years, you've been growing at least 2x the industry. I just wanted to know, one, at what level are you expecting the industry to go forward? And will you continue your outperformance of growth when it comes to the industry by a factor of 2?
Firstly, thank you very much for for the opportunity to be on your show, as well as the good wishes. I really appreciate that. Yes, we have been growing at a CAGR of 41% over the last 3 years. And it's been on the back of several investments we've made as a company, whether it's on brand, on distribution expansion, on talent, on technology, and certainly some very, very innovative products. As far as the future is concerned, we do expect the health insurance industry to grow at a very healthy clip. Analyst estimates are 17-18% CAGR into the future. And we do believe, as Niva Bupa, we're very well positioned to grow faster than industry. So yes, very, very excited about the opportunity in health insurance. Very excited about the role that health insurance can play in the economic growth of the country, and the contribution that Niva Bupa can make on this front.
All right. Hi, good morning, gentlemen, and good to see you all in. This is Nigel on this side, and welcome to the stock markets. Well, if you could give us your sense, your market share has increased since you have been growing at a faster clip than the industry. Could you tell us what is the updated market share and where is it headed?
Yes, we have. Our market share has also improved. To put it in context, in financial year 20, we had a market share of 4.1% on retail health. That number in FY24 has grown to 9.1%, so more than a doubling of market share. As we speak, as of end of August, this is publicly available information, our market share is close to 9.9% on retail health. And retail health has been our focus area. We believe it's the most attractive segment within health insurance. It is intensive, execution intensive, and there's a premium to how well we do on talent. And I do believe that as Niva Bupa, we do an outstanding job on talent. We are ranked, as a great place to work in the top 25 in the great places to work Trust Index score.
Right. So then two-part question then, just to follow up on what my colleague was asking. At what rate do you expect to grow faster than the industry? That's point number one. Secondly, in the retail segment itself, your market share is 9.9%. How much faster can the retail business grow in your overall scheme of things?
So look, Nigel, in terms of our ambitions, we do this as part of our annual operating plan process every year. And to give a specific answer at this point, honestly, I'm not in a position. All I can say is that, we are ambitious. We do want to capitalize on the health insurance opportunity in India. And we do intend to grow faster than market. What that number is, I cannot comment. But what I can say is that the ingredients of our growth in terms of doing the right thing for customer, example, the 92% plus claim settlement ratio we have, the fact that we have a 90% plus, renewal rate, I think those ingredients will continue.
All right, let's bring the money man in then. Vishwanath Mahendra is also with us. Vishwanath, thank you for joining us for this conversation. My question is more related to the operational side of things, because one, your expense ratio is at 40%, higher than the regulatory limit of 35%. So what's your glide path to bring it lower? And an other aspect of that would obviously be your combined ratio. So once your expense ratio reduces, your combined ratio obviously will start seeing improvement. So what's your target out here? Currently, it's at around 107, 108 in the first half of this year. What's a sustainable number that you're targeting out here?
Sure. So thank you very much. So in terms of expense ratio, you're right. It is 39% last financial year, and we are committed to bring it down to regulatory limit of 35% and some allowances in next financial year, which is FY26. And this is coming from a few things like Mr. Krishnan talked about the growth of more than 41%. What that meant is that our manpower increased fourfold in last 4 years. The number of branches have increased from 50 to more than 200. And all this investment had some bearing on expenses, but this is giving us already good results. And you can see that in CAGR of last 3 years, as the book grows, and which is happening every month, what happens is we get economies of scale and we get operating leverage. And that is something which is helping us in bringing down this expense ratio. And there has been improvement in last 3 years, 150 to 100 basis point every year. So that gives us confidence that we'll be able to bring it down to regulatory limit of 35 plus allowances in next financial year. In terms of combined ratio I have mentioned about 106% in first quarter, but you need to see in the context this seasonality in business, seasonality in earning, and that's why the combined ratio of first quarter is higher. Just to draw comparative, the combined ratio of last financial year first quarter was 108%, and we ended at less than 99% for the whole year. So it has to do more with seasonality, and otherwise for the whole year you need to really compare for last 2 years and quarter one. That will give you some idea. Yeah.
All right, we'll get some more forward-looking numbers from you the next time both of you all join us. Thanks a lot, gentlemen. This was a bit of a tease into what your business does, but what it can do is something that we'll quiz you on when you come back on the listing day itself. Thanks a lot for joining in. We'll take a short break, come back, get you more on the markets and a lot of other stock-specific action. Stay tuned.